Bank of England 0.25% rate cut stirs potential Bitcoin breakout. Harvey Hunter last updated August 1, 2024 at 17:05 GMT3, 2 minutes read. The Bank of England announced an interest rate cut of 0.25% down to the 5% mark. This concludes one of the longest periods of heightened interest rates. In an August 1st ex post, the Bank of England announced the move to reduce interest rates. The ease was primarily driven by inflation after it saw a monumental decline from 8% to 2% over the past year. This cut marks the bank's first interest rate, a reduction in over 4 years, with the last cut occurring in March 2020. The Bitcoin price could benefit from the surprise rate cut, as economists were divided on whether the bank would cut or hold rates steady. While there may be room for a further ease below 5% later this year, possibly in November, the Bank of England governor wants to avoid cutting too quickly or by too much. Notably, inflation is expected to creep back up from the target of 2% over the next few months. Easing monetary policy has historically boosted risk on assets like Bitcoin and gold, yet Bitcoin price remains range-bound. U.S. monetary policy is the real kicker. The Bitcoin price remains subdued below the $65,000 million mark despite the UK's first rate cut in over 4 years. The sluggish price action could be attributed to the United States Federal Reserve's decision to hold its key lending rate steady in August. However, Bitcoin price could see significant new liquidity and upward momentum with a U.S. rate cut in September, according to CME's FedWatch tool. Traders hold an 86.5% chance that the central bank will lower its rate to 5%, 5.25% in September, down from the current 5.25%, 5.50%. This follows Federal Reserve Chair Jerome Powell's comments on Wednesday, which indicated a potential rate cut coming as soon as September. Powell stressed that they need strong economic data before considering making borrowing easier again. The central bank kept its main interest rate unchanged at 5.25%, 5.50% in August as expected. However, Powell's comments and the Fed's stance indicate that a rate cut in September isn't guaranteed. Instead, it's just a question of seeing more good data on inflation and the job market. The recent ADP report indicated slower job growth, with only 122,000 new jobs added in July, falling short of the expected 150,000. Additionally, annual pay increased by 4.8%. This weak data and a significant drop in 10-year U.S. bond yields, reflecting decreased confidence in future economic growth, reinforce expectations for a rate cut. Crypto whales are scooping up Bitcoin. Despite the relative uncertainty surrounding further cuts, recent Bitcoin whale accumulation displays confidence. Large Bitcoin holders or addresses owning at least 0.1% of BTC circulating supply accumulated over 84,000 BTC in July, valued at over $5.4 billion cillion. The move represented the highest since October 2014, when Bitcoin reached 11-month lows. Similarly, last month's accumulation was driven by bargain hunting during the early July price dip below $55,000 and brief pauses during the recovery to $69,000. This strategic accumulation shows a strong belief that the prolonged consolidation phase between $50,000 and $70,000 will eventually end with a bullish breakout. This sets an interesting precedent for price action in the coming months, highlighting high potential investment opportunities. Follow us on Google News.